The one man who helped build and oversee Newmont Mining's most profitable mine is on the cusp of delivering a new cash-flowing mining company to North America. With a 70-cent a share price target from Euro Pacific Capital, this 25-cent a share company is 35% owned by one of the most successful businessmen in America. Learn more about this investment idea at futuremoneytrends.com/wealth. Greetings and thank you for joining us at futuremoneytrends.com. I'm here with a special guest today. It's somebody who's been a controversial guest because he's been consistently right about his call on silver. He's been bearish. He was bearish at 25. He was bearish at 20. He was bearish at 18. He was bearish at 15. And he's been right. And he has is pretty much basing his analysis off of technical analysis. So he doesn't not like silver. He's just basing it off the charts. And we've also received some good calls from him on Disney stock. He's also been generous and talked to us about the overall markets. So that's what we're going to talk about today. We're going to talk about what are the charts saying on the markets, on precious metals, on some of the mining shares, and hopefully find out what David Trungale from TraderTours.com is telling his subscribers because they're trading this market, and again, they are not in favor or against any one trade. They're just looking at the technical charts. David, thank you so much for joining us.
It's my honor, Daniel. Thank you once again.
Well, hey, sir, let's not start off with silver because that is definitely what. Some of our videos have just gone completely viral, and the fact is you've been right. But before we get into silver, which we definitely will, let's talk about the general markets because we've had some big moves here over the last month and a half. And actually, the last time I talked to you, you had said that you were starting to take some off the table, and you were not feeling too confident about the markets in general anymore. What are your thoughts on the Dow Jones and the S&P 500?
Well, that narrative has remained the same. I'm still very cautious here when it comes to the Dow Jones. I have pulled out. I am not in the U.S. equities markets. And my analysis as we go forward here into 2016, one thing I would bet on is volatility. It's hard for me to call for a recession. It's certainly a lot more plausible now than it was a few years ago. I know we met a year or two ago, and I was saying I still was buying stocks, which I was, all the way up until 2015. But now there are some technical indicators that are pointing to more of a bearish picture. So volatility is one big forecast for myself. I would say the risk of recession has grown. And you just have to look at this. If you forget the fundamentals, forget everything, just look at market cycles and patterns, there's no doubt every 7 years or so, historically, there has tended to be some type of a correction. So I'm not saying that we're going in for another 2008, but we could see a recession that may compare or be a little bit not quite as brutal, let me put it that way. But yes, U.S. equities are choppy. My stance on metals, I know you said you don't want to start out with that, but that is bearish. Did you want to talk about some of the individual stocks?
Yeah, let's look at. I think a good leading indicator is some of the bigger mining companies. So if you can, let's look at Barrick Gold, ABX, and Newmont Mining, NEM. Barrick is the biggest gold mining company in the world. It's up about 80% since September. Newmont Mining's up about 50% since September as well. So they're up significantly. And then the lag, of course, is that the precious metals are starting to trend higher. The higher quality juniors are definitely not going down, and many of them are rallying big. They're up, anywhere from 15 to 50% themselves. So let's just look at the ABX and NEM. Forget about what's going on in gold or the geology or discovery or anything, and let's just take a look at that chart. Let me know what we have to do to turn bullish for your analysis.
Well, there's no doubt, Daniel, in the short run, it has been a favorable environment for investors. Let's take ABX, for example, Barrick Gold. It has gone up considerably in the last few months. However, over the last 2 years, 3 years, 4 years, it has been a pernicious market for people that have been bullish on that particular investment. So I've alluded this in the past. There's a lot of different ways to play this game. I'm more of a long-term trend follower. And the long-term trend on ABX is still pointing down. What would it take for this market to break out and move into a new bull market? There would have to be more resistance layers broken. Now, because we're on a podcast here and I don't have the charts in front of me to share to the audience, I can't really go into a whole lot of details, and part of that is what I do at my website. But there would have to be more upward momentum. The moving averages would have to tilt up more. You can measure that in a variety of different levels, like the 50 and the 200. There's also a 100 and 400. There's different combinations that you can play with. None of them, of course, are perfect. And most importantly, above all, trading and learning to make investment projections accurately. It comes down to observations, which unfortunately does take time and effort.
Let's look at silver. Silver, you've been bearish on the fundamentals for silver, as you have stated in previous interviews, and your subscribers know at tradertours.com that you are aware of the fundamentals, but you ignore them and look at the technical chart. And silver, the fundamentals seem to be better than ever, but ignoring the fundamentals. What is the chart telling you on silver? Because silver is definitely doing much better in 2016 and possibly even having a breakout right now.
I still would call this rally inconsequential relative to where we have gone. And you mentioned about how I don't like or hate silver, which is true. And a lot of people don't know this about me. Those that have followed my work long enough, they will know that I was a buyer of silver. I did ride up a trend from 2009, actually through 2011. I wish I would have sold out earlier, but I ended up selling my silver inventory early in 2012. And then by the end of 2012 is when I actually started selling short. So I've been short on silver for many, many years now. And the pattern here, it's really a slow, drawn-out bear market. It's almost a seesaw-like pattern. And this rally that we're looking at is still relatively abbreviated, and it has not broke out of that channel. And a channel is just a trader's term of basically lining up tops and bottoms, support and resistance lines. So this has not sent off any signals where I see a screaming buy. I'm guessing in the short run silver could go up a little bit more, but then I'm expecting another leg down.
What's your target for silver right now? I think when you first did an interview a year or two ago, you had said it was $12.50, I believe. Is that still your target for silver?
That is, and I've said this before, and I'll say it again. I wouldn't be surprised if silver went even lower. $9 per ounce is another target I have. Until a trend line is broken, I would expect this pattern to continue to go down. And again, I'm leaving emotion out of the picture. This is just cold, hard mechanics. And I can tell you, because I've done value investing before, I've day traded before, but ultimately what I've succeeded at the most is riding long-term trends. I place about 1 to maybe 3 or 4 trades a year. I don't overtrade. And by far the most successful, best strategy out there, in my experiences, I'm just going off of my own personal statements and what's made me the most money, is riding out long-term trends. This trend in silver is still down. It could change, and if it does, I'll make sure to alert everybody. But until further notice, I would say $12 silver, I think, will still eventually happen. And like I said, perhaps lower. High single digits is not far-fetched.
Well, it seems that you've also nailed the Walt Disney call. This was a stock that you were in, DIS, and it had been very, very good to you. You'd been very accurate every time you were on the show with my partner Kenneth Amendory at crushthestreet.com or with myself. It had been very good. And then I want to say, it must have been probably over the summer, you said you were getting bearish and you had gotten out, or maybe you were going neutral, but you had gotten out of DIS. Since then, DIS it had a nice decent run into November, but it literally topped off right where it topped off in the summer, and now it's below that support at $100. So when looking at DIS, I know that's a stock you're familiar with. Does it look like the trend has completely shifted now? And now do you feel that you would be comfortably bearish on DIS?
I am bearish on DIS. Not bearish enough where I'm actually staking my own money to short it. I do have other trades in the newsletter actively right now that's available to my private members. But absolutely, the pattern is not as strong as it used to be. And anyone who's followed me closely, and the only disclaimer here I want to warn the audience is, sure, I've talked about different stocks in the past, but given I'm a trader, it's not out of the question to be bullish on something one day and then be shorting that very same investment 6 months later. Remember, we don't want to become emotionally attached to investments, and we don't want to buy and hold them indefinitely. We want to analyze, look at what's happening, and accept that anything can happen in financial markets, and we have to be prepared to shift gears. So yes, the pattern has looked increasingly bearish. I'm not shorting Disney, but I have moved out. I moved my clients out several months back.
Is there anything that you're specifically bearish about that right now you see as an opportunity, a sector possibly, or on the flip side, very bullish that might interest the audience today?
Well, Daniel, I hate to say it, but shorting the precious metal sector still looks good. Again, you can do this a few different ways. You can do it when support is broken. What I've been doing in more recent years is waiting for rallies. Now, remember, when I'm talking about a rally, this is a minor rally in a long-term downtrend. So you have to dial in and look at the overall picture. You can wait for a minor rally and then go short when you're in a bearish trend. That way you can lock in your contracts at a better price. I'm also bearish on oil. I put out a pretty loose price target on oil that I thought it was going to go to $20 a barrel. That's still a ways away. We'll see if that happens. But overall, I'm bearish on commodities, and I've been increasingly bearish on U.S. equities and the Dow Jones. So it sounds cynical. There's not a whole lot of buying opportunities, in my opinion. However, there is a lot of shorting opportunities. But when in doubt, I've said this before too, there's nothing wrong with holding on to cash, especially if you think we're going into a deflationary crunch. I've told my subscribers this. If we do go into a crash, I would put big money on it being deflationary opposed to inflationary.
Well, yeah, and having a deflationary crash, which we are seeing. I mean, the Bloomberg Commodities Index is lower than it's ever been. And, I think the inflation would come from the central banker's response. But, I mean, if we see the type of debt explosion, not only in the public sector, but with the big banks, I mean, this could be extremely deflationary. Well, hey, David Trungale of TraderTours.com. If you guys want to have access to his website, his private trades, like he said, it's not a nonstop, full-time job. What he's doing is he's making a few good trades, positioning you guys in trends, long-term trends, entering these positions, and then getting out with a profit. So check TraderTours.com out. David, again, thank you so much for your time, sir. Hope to talk to you in a few months.
Sounds good, Daniel. Thank you.